One of the hardest things for me to understand whenever I first started trading was the difference between a liquidity sweep and a break of structure. So I'm going to do my best to make these make sense, because they are not the same thing. But first, I need to define what liquidity is. Think of liquidity as stop losses. When smart money or the market movers take out stop losses of retail traders and other institutions, they make money. So these draws of liquidity are just magnets for price to go to. People are going to place their stop losses above or below a previous higher low. Every single candlestick wick, whether it's the high or the low, has liquidity of some sort. But strong draws in liquidity are going to be held on really high time frames, highs or lows. So here's an example from today on NASDAQ. On May 1st, we made this low on the 1 hour time frame. Fast forward to today, price came down and tapped below this low and went higher. This is a liquidity sweep. Now what would have made this a break of structure is if that candlestick body that swept liquidity closed below that previous low. A candlestick wick does the damage, but the body of the candle tells the story. Now, let me show you a break of structure example. As you can see here, price was in a small uptrend, so we're making higher highs and higher lows. Now, the highest low that we had was right here. So when this candlestick wick closed below this low, this indicates a break of structure, which confirms bearish order flow, meaning we want to continue to go down. With that being said, remember, higher time frames hold higher power. So if you see a draw of liquidity on the 4 hour time frame and a 5-minute candle break structure, that's not confirmation that that is a break of structure. The way I like to look at it is if you have a 4 hour draw of liquidity, wait for a 4 hour candle to break structure, or 1 hour liquidity with 1 hour structure. Or if you have an aligning time frame, wait for a super strong close. So if there's a draw of liquidity on the 1 hour and a 15-minute candle just smashes through it, then maybe you can expect the 1 hour to still, have a break of structure, but you want to typically wait for that to align. So if the first thing that you look for before you take a trade is a liquidity sweep, you want to have strong confirmation that you're going to make a reversal and look at higher time frames. I cannot emphasize this enough.